Hi guys, look, I am getting absolutely smashed with questions from investors at the moment. So many people are looking to enter the market in 2021. Most people are very surprised when they come looking for some advice from me, and one of the first questions that I bounce back at them is, why do you want to buy? Like, why do you want to invest in property? Most people find that question surprising. Most people have got no idea. They just, they know that one day it'll make sense. They're kind of in a buy and hope kind of situation where they go, well, we'll invest now and one day we'll be glad that we did. I think there's a much better way to look at it, and I want to share this with you. The reality of why most people need to think about buying an investment property or building a portfolio of properties has to do with how most people experience the results of our working years. Now, most Australians will work up until the big R, up until retirement. Most Australians will earn an income and pay tax. Most Australians will have a super balance that will basically be built up in this phase, and your super is what's designed to give you, a retirement lifestyle. Now, we've tested the numbers. We had 172 property investors go through this exercise with us, and what we found was that given the lifestyle that those people wanted to experience in retirement, given what their super balance were on track to achieving by the time they hit retirement, those investors on average will have spent their retirement, sort of funds in their super balance. They will have spent that balance from their super funds in 6 years. Now, what that means is then they're back to a pension level, or they need to sell the family home. Now, this family home is the other way that Australians build wealth. Most people want to own their family home. Most people, focus on it. It's a much harder asset to purchase than an investment property, because this family home must be purchased from your after-tax income, right? So, most Australians find that their super isn't going to be enough by the time they hit retirement, find that their only asset is their family home, and they've worked damn hard to pay it off and are very house proud, but they're left with very little choice other than to downsize the family home to help fund their retirement. Who wants to live on a pension? Once that super's gone, no one wants to go back to a pension level. There really is very little choice for most Australians, which is why this huge tsunami of investors, downsizers, the baby boomers, are now creating a ripple around Australia as they downsize millions of family homes and relocate to new markets. Now, none of us want to do that, but of course this is very much what most Australians will face. How do I sell the family home, put half of those funds back into my my nest egg towards retirement, and where can we now buy a property for half of the previous amount of my family home? So this is unfortunately how most people will see their retirement years play out. Of course, I would love to see something different to that, and it's very, very possible. It's actually heartbreaking to watch most Australians go through this when it's absolutely not needed. One of the first things that I would do is I would move the family home up to this position. I would try to protect the family home from being vulnerable. I would put it in that position. Of course, most Australians will choose. As hard as it is to pay off that family home, they'll still choose to purchase a family home. Happy wife, happy life, all of those things that are conditioned into us, so that's fine. But in this situation, I think most taxpayers, most hardworking Australians will surprise themselves how easy it is to build a little portfolio of properties prior to getting into their retirement years. Now, at the moment, we're seeing these numbers play out. We're seeing how positive this cash flow is. This cash flow allowing people to pay down their family homes 11 years sooner was an example from last week that we shared, saving $250,000 in that case. Now, those sorts of things are only going to further grow your ability to add other assets and build a portfolio even bigger, but that positive cash flow is definitely something you should expect right now. So there's no impact here. In fact, that portfolio should be paid for by your tax. If you're paying tax and you're not putting that tax to work for you, just giving it to the tax man, give yourself an uppercut. You shouldn't be doing that. Your tax funds should be going to buy property. The Australian government wants us to supply property in Australia. Please make sure you understand it. It's basic, but it is the core way that you should be first considering to buy property. Now, once you've got 1 or 2 investment properties in this space, I'd also consider, could you qualify? Would it be smart for you to think about a property in this space? New laws, well, not that new, about 10 years ago, new laws came out that you could leverage your super funds. And what happens when you get to these situations where you start looking at how do you leverage money that that isn't going to impact your lifestyle, that's going to give you positive cash flow, it's not going to put any pressure, it's actually going to contribute to your lifestyle, potentially paying down your family home sooner, etc., etc. Instead of having these sorts of downward trends, what you start ending up with is growth trajectories that come out of both of those parts of your asset base, where the values of these properties continue to grow. Your assets continue to grow in value, the cash flow from those properties continue to grow in value, and so you end up with a never-ending amount of cash flow that's building and creating more and more wealth. You don't have to cut down those wealth trees. Those money trees don't need to be chopped out. I never understand, kind of the investor that buys a property so they can sell it when they retire. Please, don't play that game. Play the game of continued cash flow, continued wealth growth. If you ever have to sell a property, of course, this would be the one that you would be considering and you'd be planning to sell. You will be able to get some advice around this, but I think what you'll find, and what I'm confident you'll find, is the property that's here in your super fund, when you sell that in your retirement years, you don't pay any capital gains tax. So if you've got a plan to cash up, add more funds, big lumps of cash, this would be the one that you focus on. But all the way through, you're protecting this property. Your family home is protected. You've got much more opportunity to call the shots. You're not going to be put in a corner and have to downsize. The choice is yours. But your portfolio continues to grow. You should be able to grow this portfolio without any impact on your pocket, without any impact on your lifestyle. So many layers here, so much doability at the moment. Throughout the 2020s, you are going to see so many people build wealth like we've never been able to build before, because the money is so cheap. So please don't underestimate this. I actually did a webinar very recently that outlined a few of the strategies around this, the key strategies that I think investors should be considering first. I think it'd be really worth your while to check out the webinar. We've kept the link below this particular video, so please check it out, but make sure you understand why to buy. Your property should be a vehicle to create wealth, and everything about the way that you shape that vehicle should be that when you hit retirement, this cash flow is going to grow, you've got more and more lifestyle every year, and you have no pressure on your family home, and there's no need to downsize to fuel your retirement. And certainly we're not going anywhere near needing to survive on a pension. Take care, but don't forget these basic principles. Please check out the recent webinar. I think you get some more great ideas there. Take care, guys.
Location approved, property approved, safety guarantee. Invest approved, protecting you every step of the way.